Stephen Koseff, the Chief Executive of Investec, is with us in studio to discuss developments in the group's core business areas with your pre-close update to investors. Stephen, it looks good. I think the pound has made it look good, or rather the rand weakening against the pound. But reading through the commentary that you put out this morning, it looks like the first 6 months of this financial year, you're going to be shooting some lights out.
No, I think we didn't say shooting lights out. But I think what we've done is...
If you're up in pounds, then...
Yeah, no, in rands we're shooting lights out, sure.
Yeah.
We should be up in pounds. But if you look at the big thing for us is that, the strategic initiatives we embarked upon, at the end of last year, not financial year, calendar year, have now all been executed. 2 still have to be completed, but they've all been executed. And
have they all worked the way you thought?
Yeah, I think we did very well in Australia. The other 2 were much more difficult assets to deal with because of the history. UK went through a crisis. Ireland's house prices collapsed 60%. So those were assets that we had to pick our moment in which to sell, and life is improving, and so there are buyers for that type of asset now.
So you almost had to hold on to Kensington, for instance.
We had to manage it. We had to manage it through to a point where it was in a sellable condition. And Kensington, UK, we got out okay. Kensington, Ireland, we took a bit of a smack, but that was always expected.
Yeah, Ireland has been a disaster for lots of people.
It's recovering quite strongly, but you need a broad-based recovery across the whole country. And we felt strategically we need to clear these assets to concentrate on our core business.
So Ireland's gone now as well?
The mortgage business, yes.
Do you still have exposure to Ireland that is troublesome?
We have our old private bank exposure, but it's not big. And we have quite a nice little business there.
I saw John Green this week from Investec Asset Management, and he was telling me about consulting to people in Japan and Singapore. How wide around the world are you guys?
Investec Asset Management is very global. So it operates in most geographies in the world, either managing money for the state's pension funds, sovereign wealth funds. So they manufacture their product and their capability really in South Africa, which is in Cape Town and in London. They have some capability in Singapore / Asia, including China, and you need to have some capability there. But the rest of it is distributed across the globe. Sales offices in New York, sales offices throughout Europe, sales offices in Asia. So,
but for Investec, the main stakes in the ground, South Africa, UK.
That's where the banks are. We do have a bank in the Channel Islands, in Mauritius, and in Switzerland. But our main banking businesses are South Africa, UK. And this advisory and origination businesses, we still in Australia, we're in Hong Kong / Beijing, we're in Mumbai, we're in New York, we're in Canada. But those are not banking businesses. They do banking business by originating transactions, but they're not banking businesses. We don't want to be banks there.
The decision that the Scots have made to not break with the union, was it ever anything, did it affect your business at all? We've heard some of the banks were concerned.
I think mainly the banks with head offices in Scotland were worried because they'd have to re-domicile themselves. For us, it made no difference.
And the regulation that's been coming in post the global financial crisis, we know the regulators are trying to get their hands on the banks.
They've got big teeth.
Yeah. Are they
big claws and big teeth?
Is it hurting?
It's something you just have to adapt to. It's intrusive. The word is intrusive. They're very intrusive, and some of the global regulators were sleeping at the wheel pre the financial crisis. They're now very wide awake, and they've strengthened the regulation, they've strengthened the laws, they've strengthened capital requirements, strengthened liquidity requirements. Those are, to be in the game, you have to be able to comply. So we just have to up our game to meet those obligations.
But if your reserve requirements, if the regulations get tighter, then your return on equity into the future you'd have to adjust that too.
Well, you've seen, we were all earning 25% return on equity pre-financial crisis. We're targeting just to get above 12 at the moment, and that's in pounds. So in our rand business, we up at about 15, 16. But we're way from the 25s, and we're never going to get back to the 25s with the amount of capital we have to hold.
So how, and it's interesting that point, but we've been seeing First Rand getting to 22 in this market. What makes them
Well, they've got
different?
a big retail consumer business in a emerging market, which is South Africa and maybe a bit in Africa, which is, you'll earn, it's different.
Mm-hmm.
You're not going to ever get that in the developed world out of banking, not with interest rates of 0.
And it's unlikely that you would be able to sustain that if even for someone like First Rand.
Yeah. I don't know whether they can sustain it or not. It's a very good return on equity. You can see the other retail banks are a lot lower.
Stephen, well, I look forward to seeing these numbers when they come out in rands, because people with rand liabilities are going to get terribly excited. Just one last point. It was interesting to note that your third-party assets under management now in London are
global.
about half the size of the South African GDP.
Well, we
2.16 trillion.
yeah, that's our global
Rand.
funds under management. 2.16.
If there were ever an example of globalizing a South African business, that's got to be one instance. Because you could never have got there in the South African market.
No, never. No, we're the third biggest wealth manager in the UK as well. So that we also rate as a good achievement for us.
And do our leaders in this country like the fact that we've got another African champion?
I hope so. We're still a zebra. We're running around the world in our zebra kit. We acknowledge where we're from.
Indeed, Investec always does. Stephen Koseff, the Chief Executive of Investec Group.